Breaking news overnight, another American bank has failed.
Breaking this morning, First Republic Bank has become the second largest bank failure in U.S. history.
Another major bank failure has shaken the U.S. financial system. Federal regulators' seizure of First Republic Bank comes less than 2 months after Silicon Valley Bank and Signature Bank collapsed.
Over a 5-day period in March 2023, 3 small and medium-sized U.S. banks went bankrupt, sending global bank stock prices plummeting, and regulators having to react quickly to stem the fall. Silvergate Bank and Signature Bank, both with exposure to cryptocurrencies, failed amid the turmoil in that market. Silicon Valley Bank, SVB, went bankrupt as the bank ran out of money after it sold its Treasury bond portfolio at a hefty loss, raising concerns of depositors on the bank's liquidity, and thereby causing a bank run. A bank run occurs when many customers withdraw their money from the bank, believing that the bank may collapse in the near future. At this point in time, take note of this term, as we shall discover that it had a big role to play in First Republic Bank's demise. More on that later.
The Silicon Valley Bank collapsed on March 10 after a run on deposits doomed the tech-focused lenders' plans to raise fresh capital.
First Republic Bank's client base was primarily tech companies and high-net-worth individuals with large deposits, but balances above $250,000 are not guaranteed by the Federal Deposit Insurance Corporation, FDIC. In response to the then ongoing banking failures, the 3 main U.S. federal banking regulators, which are the Office of the Comptroller of the Currency, OCC, the Federal Reserve System, and the FDIC, announced in a joint statement that extraordinary measures will be taken to ensure that all deposits at Silicon Valley Bank and Signature Bank would be honored.
Federal officials had been working around the clock to try to find some resolution in the wake of the collapse of Silicon Valley Bank. And tonight, the Treasury Department, FDIC, and Federal Reserve all releasing a statement saying that all depositors with money at Silicon Valley Bank will be made whole. That includes the depositors who previously their deposits only up to $250,000 had been insured. Additionally, they also announced that a second bank, Signature Bank, has also been closed.
The Federal Reserve established something called the Bank Term Financing Program, BTFP, to provide loans of up to 1 year to qualified depository institutions that pledge qualifying assets as collateral. To prevent this from affecting more banks, global regulators of the sector, including the Federal Reserve, Bank of Canada, Bank of England, Bank of Japan, the European Central Bank, and the Swiss National Bank, intervened to provide extraordinary liquidity outside the United States and other central banks. Efforts to quell the crisis is notably from Switzerland, where on March 19 Credit Suisse was acquired by rival UBS as part of a government-brokered deal to prevent banking crisis. Like SVB, First Republic Bank, FRB, had large uninsured deposits exceeding $250,000. These uninsured deposits accounted for about 67% of the bank's total deposits at the end of 2022 and 27% as at the end of March 2023, as $100 billion of these uninsured deposits were withdrawn.
Almost unprecedented move by the banks. 11 of them came together and they all managed to agree to deposit $30 billion with First Republic. And it's really a very interesting solution if you think about it, because it's in their best interest to do this. The stock market, no doubt, will get a bit of a lift from this, and that benefits the banks.
Despite this, just over 1 month later, FRB was put up for sales, making it the largest bank to collapse since the 2008 financial crisis. So, what brought about the collapse of a bank that was once one of the most renowned regional banks in the States, with over $200 billion in total assets as of April this year, and ranked 14th largest U.S. bank? But first things first, let's delve into getting a deeper understanding of what First Republic Bank was. You're watching Money Related. First Republic was founded in February 1985 by James H. Herbert II and commenced operations on July 1, 1985, as a California chartered industrial lending company. It would go public in August 1986, with shares selling for $10 a share, following an initial public offering. In 1996, First Republic sought to switch to a chartered bank to expand its services. And in July 1997, after a legislature they had lobbied for was passed, First Republic Bank became a state-licensed bank, called First Republic Savings Bank. Before becoming a state-run bank, First Republic focused on huge mortgages, certificate of deposits, and savings accounts. And by the time of its collapse, FRB operated 93 offices in 11 states, mainly in New York, California, Massachusetts, and Florida, in San Francisco, and specialized in loans for luxury homes, second homes, condos and co-ops, and investment assets. FRB aimed at high net worth individuals.
Breaking this morning, First Republic Bank sold to JP Morgan after regulators swoop in and seize the troubled bank. This makes First Republic the second largest bank failure in U.S. history.
But this wasn't the first of its kind for FRB, as in September 2007, First Republic was acquired by Merrill Lynch, a wealth management company, for $1.8 billion in cash and stock. And in July 2010, Bank of America, which acquired Merrill Lynch and thereby acquired First Republic, sold First Republic Bank to a group of private investors, including Colony Capital, General Atlantic chairman James Herbert, and former coup Catherine August dueled for about $1 billion. First Republic Bank became the second largest bank failure in U.S. history on May 1, 2023. With most of its business sold to JP Morgan Chase after federal regulators seized it. The bank suffered from a run on deposits just weeks after the collapse of two other large banks, Silicon Valley Bank and Signature Bank, a phenomenon which eventually also led to its own collapse. During the March 2023 U.S. banking crisis, Fitch Ratings and S&P Global Ratings downgraded First Republic's credit rating due to, quote, a high proportion of uninsured deposits coming from wealthy individuals who are more inclined to move their money elsewhere, and a loan-to-deposit ratio of 111%, signifying that FRB had lent out more money than they had in customer deposits. On March 19th, S&P downgraded the bank's credit rating by nearly 3 grades, blaming it on the fact that the bank may not be able to address the significant operational, liquidity, funding, and profitability challenges that S&P believed First Republic Bank was facing at that point in time. On that day, the bank's capital shortfall was $13.5 billion, which the Wall Street Journal likened to Silicon Valley Bank's liquidity crisis as a factor in its demise. In its first quarterly earnings released amid the crisis, the bank noted that customers have withdrawn more than $104 billion in deposits during the turmoil. It noted that outflows eased in April. The reason of these outflows is explained by the number of the bank's wealthy customers, whose assets over $250,000 would not be insured by the FDIC. On April 28th, the bank announced plans to begin selling its bonds and stock at a loss to raise capital. The situation was quite critical, and the bank also began laying off employees. That day, it was announced that the FDIC was considering an acquisition of the bank, causing its shares to fall another 43% to $3.50. After the price fell another 42% in after-hours trading, the FDIC confirmed its pending takeover of the bank. The next day, the FDIC reached out to various banks, including JP Morgan Chase, PNC, and Bank of America, telling them they had until April 30 to submit a bid for First Republic Bank. On May 1st, the FDIC announced that First Republic had been shut down by the California Department of Financial Protection and Innovation, and that its assets had been seized by the FDIC. Ultimately, JP Morgan Chase won the auction and paid the FDIC $10.6 billion to acquire almost all of First Republic's assets. It should be noted here that JP Morgan Chase did not assume First Republic Bank's preferred stock. The New York Stock Exchange delisted FRB's common stock on May 2, 2023. First Republic Bank failed for many of the same reasons as Silicon Valley Bank, SVB, and Signature Bank, including the fact that the bank had large amounts of uninsured deposits and struggled with liquidity. What really killed FRB is the fact that, just like SVB, a good percentage of its clientele were Silicon Valley startups, with balances of more than $250,000. To break this down, FRB failed because 1. Uninsured deposits. A large number of uninsured deposits can contribute to a bank run when investors begin to panic. First Republic's affluent clientele had a high proportion of uninsured deposits, with over 67% of the bank's deposits uninsured as of December 2022. 2. Lack of liquidity. First Republic's primary source of income is net interest income from loans and investment securities. Many of its investments are in home loans and municipal securities, which are less liquid and do not pay competitive interest rates. Among mid-tier banks, First Republic had the highest ratio of loans and securities to uninsured deposits as of December 2022. 3. Credit rating downgrade. The bank faced several downgrades from credit rating agencies, out of concern that the money injection it had earlier received won't solve the bank's liquidity problems. Neither would it solve its capital and profitability challenges. And 4. Mistrust in regional banks. Due to the failure of Silicon Valley Bank and Signature Bank at the beginning of the year, as well as credit rating downgrade, investors were increasingly concerned about keeping uninsured deposits at a regional bank. A JP Morgan spokesperson said on June 1st that JP Morgan Chase & Company will close 21 First Republic Bank branches by the end of the year, as it integrates the collapsed bank into its operations. These 21 branches account for about a quarter of the First Republic's 84 branches across 8 states. The JP Morgan spokesperson said, "These locations have relatively low volume of transactions and are often a short drive from the other First Republic office."
We've also got some other headlines coming through with regard to future policies. We will see job cuts, unfortunately, at First Republic Bank, who say that they will cut, in this current quarter, between 20 to 25% of the workforce at First Republic, again, to try to control costs there.
Approximately 100 employees affected by the branch closure will be assigned a 6-month transition assignment. They will then be able to apply for other positions at JP Morgan, which currently has 13,000 vacancies. Last week, nearly 1,000 workers were warned they would lose their jobs, while others were given temporary assignments for a period of 3 months to a year. First Republic Bank has gone from being the 44th best U.S. bank, according to Forbes, to be among the few regional banks that has gone bankrupt in this 2023, due to bank withdrawals caused in part by the large amount of uninsured deposits it was carrying, as well as financial difficulties, caused mainly due to the broader interest rate environment. To keep your money safe, consider keeping less than the FDIC's minimum insurance limit of $250,000 in your bank account. If you need to deposit more, you can open another account at another bank. A financial advisor can give you more advice on how to manage your money distribution based on your individual circumstances. And by the way, it is also worth noting that as long as online banking and automated clearing houses exist, the probability for banks to keep failing remains high. It is a well-known fact today that these two exacerbated the bank failures we experienced these past months, as it has made withdrawal of funds quite easier. With that, we come to the end of this episode of Business and Technology. If you like this video and would like to watch more business stories, I will leave the link of a video I did about one of the biggest white-collar criminals in Africa in the description. and on the end screen displaying on this video right now. And until the next episode, peace.